Good morning, I'm Steve Forbes and this is 90 at 9, brought to you by interest.co.nz. This is where you get everything you need to know in 90 seconds at 9 o'clock with news. Central bank signals suggest more stimulus is on the way. But first up today, there's been another negative dairy auction, the third in a row. Prices dropped 3.8% today in US dollar terms, and that's 2.5% in New Zealand dollar terms. Whole milk powder prices are down 4.3%, butter's down 5.7%. Today's events take the overall prices back to where they were in February, and this auction represents an 8% fall since early May and will no doubt affect Farmgate milk payout forecasts. US housing starts in May have come in 4.7% lower than for May 2018. Building permits are down on a year-on-year basis as well. In China, the May data for our price levels show them rising at a sustained clip, up more than 10% per annum in many major cities. A closely watched German survey of business opinion, the ZEW survey, fell sharply in June, and that may be one reason the European Central Bank boss signalled that the central bank could roll out fresh stimulus as soon as July, sending the euro lower. Essentially, this reinforces the fear of the European economy slipping back into recession, and it has also brought a rebuke from the American president. Meanwhile, there are reports circulating that Trump is considering removing Jerome Powell as the chairman of the Fed. On the trade front, an extended meeting between the Chinese and US presidents has been confirmed at the Japanese-hosted G20 summit later this month. The Chinese say they are keen to communicate fundamental issues to the Americans. Equity markets like the prospect, and the S&P 500 is up 1.1% so far today. European markets were up even more overnight, and markets also like the prospect of more central bank stimulus. Meanwhile, Facebook has announced it will take on the global financial system by creating a cryptocurrency called Libra, a payment system powered by blockchain and a digital wallet. All this is part of a plan to move into lending. It is likely to run into substantial regulatory opposition though. In Australia, yesterday's release of the Reserve Bank of Australia minutes shows they think wage and inflation growth there is still some way off and further rate cuts will be needed to stimulate their economy and jobs. Analysts now see their 1.25% policy rate cut aggressively over the next few months and could go as low as 0.75% by the end of the year. The US 10-year Treasury yield is now under 2.06% and down 3 basis points from yesterday. Gold is up $8 today at $1,346 an ounce. US oil prices are $2 higher today, boosted by hopes on the trade front, and they are now just on $54 a barrel, while the Brent benchmark is now at $62 a barrel. The Kiwi dollar is firm against the greenback at 65.2 US cents. On the cross rates, we've risen slightly to be at 95 Australian cents, and against the euro, we're up to 58.3 euro cents. That puts the TWI 5 up to 70.3. I'm Steve Forbes, and that was 90 at 9, brought to you by interest.co.nz.